In recent years, digital currencies have moved from being a niche experiment to becoming one of the most discussed financial innovations of our time. What once started as a decentralized idea in the form of Bitcoin has now transformed into an official policy direction for entire regions. And today, Europe has taken a historic step forward, the official adoption of a digital currency. This is not just another headline, it is a moment that could redefine how people around the world think about money, banking, and global trade. So, what does this really mean for Europe? And more importantly, how could it reshape the global economy? Let's break it down. A new chapter in European finance. The European Central Bank, after years of research, testing, and debate, has launched its official digital euro. Unlike cryptocurrencies such as Bitcoin or Ethereum, which are decentralized and often volatile, the digital euro is a central bank digital currency, commonly called a CBDC. That means it is directly backed and controlled by the European Central Bank itself, giving it stability, trust, and legal recognition. For ordinary citizens, this could mean faster payments, cheaper cross-border transfers, and greater financial inclusion. Imagine being able to send money across borders instantly, without paying high fees to banks or waiting days for processing. That's the kind of efficiency the European Union is aiming for. Why did Europe do this? The official adoption of a digital currency is not just about modernization. It is also about survival in a rapidly changing financial world. First, there's competition. China has already rolled out its digital yuan, and other major economies are experimenting with their own CBDCs. If Europe waited too long, it risked falling behind in the global race for financial innovation. Second, there's security. As cryptocurrencies and private digital coins grow in popularity, governments worry about losing control over monetary policy. By launching the digital euro, Europe ensures that citizens and businesses have a safe, government-backed alternative to private or foreign digital currencies. And third, there's efficiency. The global financial system, as it stands today, is often slow, expensive, and outdated. Digital currency can reduce transaction costs, improve transparency, and make the financial system more resilient in times of crisis. Implications for global trade. Now, let's zoom out. What does this mean for the rest of the world? For starters, international trade could become faster and more seamless. If European exporters and importers use digital euros, transactions with partners in Asia, Africa, and the Americas could be settled instantly, without the traditional reliance on SWIFT or correspondent banks. This could challenge the dominance of the US dollar in international trade. In fact, some analysts believe the digital euro might slowly chip away at the dollar's position as the world's primary reserve currency. While it's too early to say for certain, this step signals Europe's ambition to strengthen its global economic influence. Impact on developing nations. For developing countries that trade heavily with Europe, this change could be both an opportunity and a challenge. On one hand, faster and cheaper transactions could boost economic growth, reduce remittance costs, and encourage more cross-border investment. On the other hand, countries without strong digital infrastructure might struggle to keep up, widening the gap between nations that embrace digital finance and those that do not. For example, African nations with growing fintech sectors could benefit greatly from connecting directly to Europe's digital system. But countries with weak internet access or outdated banking systems could be left behind. The role of banks and businesses. Banks are perhaps the most nervous players in this story. With the digital euro, people could theoretically hold money directly with the central bank, bypassing commercial banks altogether. That raises the question, will banks lose their traditional role as intermediaries? Europe has reassured financial institutions that banks will still play a role in distributing and managing digital currency. But make no mistake, business models will need to adapt. Payment processors, credit card companies, and even fintech startups will all face new competition in this digital era. For businesses, however, this is largely good news. Imagine a global corporation being able to pay suppliers, employees, and investors across multiple countries instantly. Reduced fees, faster settlements, and higher transparency could save billions of dollars annually. Concerns and risks. Of course, not everything is positive. The digital euro also comes with challenges and risks. Privacy is one of the biggest concerns. Will governments have too much visibility into people's financial transactions? While authorities argue that digital currencies will include protections for privacy, skeptics fear the rise of financial surveillance. Cybersecurity is another issue. With money becoming entirely digital, hackers and state-sponsored cyberattacks could target the core of Europe's financial system. The European Central Bank insists that it has invested heavily in security, but no system is ever completely safe. Finally, there's the risk of inequality. If digital finance grows too quickly, those without access to smartphones, internet, or digital literacy could be excluded from the new economy. Europe will need to make sure no one is left behind. A turning point for the world. So, is the world really changing because Europe adopted a digital currency? The answer is yes, but it's only the beginning. The digital euro is more than just a new payment method. It's a symbol of how money itself is evolving. From coins and paper, to credit cards, to mobile banking, and now to official digital currencies, the financial system is undergoing its biggest transformation in centuries. Other regions will watch closely. If Europe succeeds, more countries will accelerate their digital currency projects. If it stumbles, skeptics will use it as proof that the world isn't ready. But one thing is clear, the future of money is digital. And Europe has just taken a bold step to lead the way. Final thoughts. As we look ahead, we should ask ourselves a few important questions. Will digital currencies make life easier and fairer for everyone, or will they deepen global inequality? Can governments balance innovation with privacy and freedom? And perhaps most importantly, will the digital euro spark a domino effect that reshapes the entire global economy? Only time will tell. But for now, Europe has officially entered the digital currency era, and the rest of the world is paying close attention. Because when money changes, everything changes.